investors focus on this week's highly anticipated Fed meeting, where the FOMC is expected to cut interest rates for the first time since 2020. Joining me now to discuss is Alan Blinder, former Fed vice chairman, as well, of course, as a professor at Princeton. Alan, it's great to have you on. I mean, it's a rare level of suspense, I think, especially maybe the first move of a cycle is in the air. Do you really think it's a 50-50 as the market odds would have it, between a quarter point and a half?
Yeah, I'm often not with the market, but in this one I am. It's kind of a coin flip. Now, I don't mean Jay Powell's going to flip a coin. I'm pretty sure he knows. We don't know. So from our point of view, it's a coin flip.
And do you think, I guess, how much does it matter? And what message does it send in either scenario?
Not a great deal. I think what matters much more than whether it's 25 or 50 is the prose that surrounds either the 25 or the 50. You could have a 25 that sounds aggressive about future cuts, or you could have a 50 that sounds a lot more passive about future cuts. And frankly, it's not so clear which of those two is the more expansionary policy. So I think the pros in this case matter much more than the number of basis points, assuming it's either 25 or 50, and the Fed doesn't have some big surprise in store for us, which I certainly don't think.
Yeah, like 37.5 or nothing?
No,
I mean,
like
I would
75 or 0, yeah. We'd be shocked. You'll be shocked,
Sure.
I'll be shocked. That's not going to happen.
Yeah, they seem not to necessarily be looking to shock a market already a little bit off balance in terms of exactly what to respect. Look, I guess the nature of a potential soft landing is that it's in the eye of the beholder, depending on the latest run of data. And so you can make the case that you have to be careful and take out some more insurance against the downturn by going deeper on the first cut, or you assume that you're going to be okay and you have time to move later. Which way would you come down?
Well, that's why it's 50-50. I would come, if it was completely up to me and I was just choosing, I would go 50. I'm more worried, a little bit more worried about the downside risk than the upside risk, but it's a very close call. And the point is, an important point is, I don't believe everybody on the Federal Open Market Committee thinks what I just said. I think you still have some hawkish sentiment on the committee, and that could drive Jay Powell to think 25 basis points is the way to hold the committee together, hopefully without dissent at all.
Yeah, because there was a case being built that, 25 with a dissent for 50 or more than one dissent would implicitly be a bit of a dovish message there. I think one thing that maybe the market has to be refocused on is you wouldn't necessarily be wishing for the circumstances under which the Fed would go big and keep going big. I mean, back in the mid-90s when you were there, that 95 easing cycle was hardly anything, right? It was a couple of cuts, and then it was sort of a hold for a while because the economy did okay.
We did have a 75 in there, the only 75 of Greenspan's entire 18 and a half years. I thought that was pretty aggressive at the time. But in retrospect, if you look at the whole thing, it was a kind of a calm tightening and letting the economy down very nicely. That looks to be what's happening now. And I want to emphasize, as I've done before in other fora, this was a much harder job that Jay Powell and his colleagues had to engineer a soft landing in this environment than Alan Greenspan and his colleagues had in 94, 95. Much harder.